Hello and welcome to the Your Financial Pharmacist Real Estate Investing Podcast, a show all about empowering pharmacists to achieve financial freedom through real estate investing. I'm Nate Hedrick, and each week, my co-host David Bright and I explore stories from pharmacists all over the country who are achieving their real estate goals while maintaining a meaningful career in pharmacy. Whether you're a first-time investor or a seasoned pro, we're here to provide education and inspiration about the world of real estate. Please note, this podcast is intended for educational purposes only and should not be considered financial or investment advice. Hey, David, how's it going?
Hey, good. Thanks, man. How you doing?
I'm good. It's been a busy week. We're really trying to make some headway on this current rehab project. The quartz countertops is the highlight of the week, so we're getting those installed, which will be fun.
Yeah, that's always a fun step when it starts to come together and looks really cool. Yeah, I know we just finished a kitchen also. We went with laminate in this one instead of granite or quartz, right? Mm-hmm. Which is a little more common for my market and the price point and the purpose and some of those things of what we're doing for some of these rentals. But it's interesting to talk with different investors that have different strategy and different philosophy on those kind of things. I even partnered with a friend on a flip a while back who introduced me to butcher block countertops and how those can look really, really sharp as well. And so again, lots of great options depending on price point, area expectations, flip versus rental, purpose of a property, all those kind of things.
Yeah, I really like learning those strategies from others and trying to maximize an investment, right? Figuring out what's common in your area, make sure that you're not the one that sticks out, right? If you are going to stick out, you're sticking out in the best way possible. And so I think, again, it's just nice to talk to others and learn more about that.
Yeah, and today's guest talks a lot about partnerships and ways that different people can come together. Two heads are better than one. Bring those ideas together, those experiences, those perspectives together. And today's guest talks about that specifically on the buy and hold long-term rental side of real estate investing.
Yeah, we brought back on Paul Hinckley. Paul was on episode 16 way back when, and he really is a full-time pharmacist that wanted to find a way to use real estate to develop some passive income. And so started off, again, very methodical, very slow, and then really started to ramp up as things panned out. And so it's just, we wanted to bring him back on to talk about that growth and what that's looked like.
Yeah. And one thing that causes a lot of new investors to sweat is the fact that if you have one rental and that one rental has a vacancy for whatever reason, which is going to happen over time in most cases, or like a tenant's probably not going to live in that house for 40, 50 years, right? At some point, there will be vacancy. And then you know that if that's your only rental property, you have to come up with that mortgage payment in full to float that while there's not a tenant in it. And so some investors really sweat that. And some investors really like a 50-50 partnership or some other partnership approach on their first project so that they can share in that risk. So finding someone that you can trust to work with can be a way to help both partners take the leap into real estate investing. But partnership also offers up several other areas of risk that really need to be carefully considered in there too.
Yeah, we actually talked several times in this episode about getting everything in writing when it comes to a partnership agreement, why it might be wise to sit down with an attorney in some cases, spend a few $100s up front to make sure that you're not running into a potential issue down the road.
Yeah, no, we've done that before and it's been super helpful, not because I didn't trust the partners that I worked with and not because I expected anything to go wrong, but the attorney really helped us to think through all the different things that could happen, right? And by thinking that all through, it helped everyone involved to better understand the risks, better understand each other, better understand how we could or should handle things when something goes wrong or when something breaks or when there's an unexpected expense. Because it's definitely fun to talk about splitting profits, but it's less fun when you discover termites or a furnace goes out or something like that. So having those conversations in advance can just make things run so much more smooth throughout the process, make those hiccups really manageable instead of turning into fights and ruining friendships.
Yeah, we did that. My brother and I partnered together on a deal. And one of the first things we did was sit down and write everything in writing to keep it really clear. And again, it's not that I don't trust my brother, I trust him more than anybody, but I wanted to make sure that we had that stuff in line before things got off on the wrong foot. So a lot of that comes up in the episode. If you're a safety-oriented pharmacist like most of us, we can't help but mention and really further emphasize the value of setting that firm foundation. And so we'll bring that up several times in the episode. So we'll take you to it and hope you guys enjoy. Hey, Paul, welcome back to the show.
Great to be back. Happy to sit down again with you guys again.
Yeah, you reached out to us on LinkedIn and we got to talking, realized you were absolutely killing it. So we had to bring you back on for an update. So I appreciate you joining us.
Yeah, you bet.
So we had Paul back on episode 16. Definitely a great one to go listen to if you haven't already. But Paul, for those that haven't heard that show, maybe give us a little bit of a recap on who you are, where you're located, and what kind of investing you do.
Yeah, so I'm a pharmacist at the Utah Poison Control Center. So I live in Utah and I invest in Kansas. I invest in Kansas because the market there is just so much more affordable than the one in Utah. And when we last sat down, I had 2 3-bed, 1-bath, single family homes that actually share a property line and have been, great for me. I had my first tenant renew their lease, and my second tenant was a 2-year lease from the get-go. So they haven't needed to renew. They're about a year into that lease, and they've been awesome.
That's great.
Yeah. And you've scaled pretty quickly from there, right? Like that feels like, to a lot of people listening, I'm sure that feels pretty manageable, right? Like 2 very standard 3-bed, 1-bath houses, literally neighbors, long-term leases. Like this feels really steady and stable, which I know a lot of pharmacists gravitate to. You threw that right away, right? Because you decided you're going to scale from there. So what caused you to scale, and can you describe what that looks like?
Yeah, so I decided, after working with my property manager, that I don't know if I'd call it an incentive, but they will drop their management fee from 10% to 8% once you reach 10 doors. And so I was like, well, 10 doors seems like a good goal. let's start going for it.
Cool.
And so that was kind of why I started just looking for the opportunities to acquire more and grow.
And so in the last year alone, literally since we've last talked, so not even a year, you added both a triplex and another single family home. Is that right?
Yep. Yeah. Triplex was purchased shortly afterwards. I think we might have ran over that deal a little bit. I was considering it potentially when we last talked, and then got that one all down and up and running, and then found another one and got it locked down as well and closed on that one right at the end of last year.
Nice.
That's awesome. And were those properties on the MLS? Were you doing any other kind of creative marketing or anything like that, or just kind of going through a real estate agent? How did you find those properties?
Yeah, so I do all my deals off the MLS. I don't live in the area. I'm plenty busy with all the other stuff that I do. So I'm not interested in trying to go off deal and do mailing campaigns. I'm too far away to drive for dollars, all that kind of stuff. And so I look for things on the MLS, anything that piques my interest. I get my agent out there in Kansas involved, and we go check it out. And she does all that for me, just kind of FaceTimes me as she does a walkthrough, and keeps it real easy and passive on my end.
And that's awesome. And I feel like so many people that I talk to say, well, I can't get into the game, Nate, because I'm only able to access the MLS and there are no deals to be had on the MLS. But David and I talk all the time how we find properties there. You're, again, living proof that out west you can do the exact same thing. It just takes a little bit of patience, knowing what you're looking for and being able to act once that stuff comes along.
Yeah, and I think it's also like just being patient as well. Like my triplex deal, it was already full of tenants. All 3 units were rented, and the tenants didn't make it easy to show. I don't remember how many times our showings got canceled because of the tenants, but I was like, great, I'm not in any rush. And when I finally see it, if I don't see anything wrong, I'm totally going to lowball because I know you're going to have this issue with anybody who's interested.
Nice. I love it. So that does drive the question. So looking at these places, you have an idea, right? And talking about buying them, but how did you fund those properties? Are you still doing a 25% down? Or, again, that's what we talked about last time. Is that still your strategy?
Yeah, so I still do 25% down, 30-year mortgages. The main difference from before until now is that these last 2 deals have actually been with partners.
Nice.
That have joined in and kicked in some money as well.
Great. We'll make sure to dive through that because I think that can feel like an overwhelming topic, but I think we can break that down so it can feel a little bit more normal for everybody. And again, it's been a great way for you to scale up, which is awesome.
Mm-hmm.
Yeah, and for the price points of these properties, I know you were saying before that when we talked on episode 16 that these single-family houses are under $100,000. Is that correct?
Yeah, so I picked up the first 2 for I think like 83 and 86 or somewhere right around that ballpark.
Okay. And then what was the price point on the triplex again?
So they had listed for 180 and we ended up closing at 167.
Nice.
Very nice. So I know those numbers may feel a little different to people elsewhere in the country where 167 barely buys you like a 2-car garage, right? But like 167,000 for a 3-unit property. But even then, that's a pretty big deviation from where you started. So again, why the triplex and why not like you found a good thing with the 3-bed, 1-bath, bread and butter? Why deviate?
Yeah, so a lot of it was like one purchase getting me 3 doors. That's almost a third of the way to my 10 doors to get my knock off of my property management fees. A little bit of interest in just kind of expanding from, all right, I've done 2 single families, small multifamily seems like a manageable step, and still fit within just my goals of being able to get conventional mortgages through my credit union out there. And it's a small enough step that's still growth in the right direction that was manageable.
Oh, very nice. One other kind of aspect of this too, although deviation into a small multifamily property like this may make it difficult. One thing that I know that I've learned of just trying to grow in one market is you start to learn things about that market. You start to learn things about the team. You start to learn things about the city. Things just kind of get easier with systems and processes as you just get fluent with that area and comfortable with that type of investing. So I'm curious, what are some things that you've learned or have made things easier or shortcuts you've observed in continued investing in one area?
Yeah, I mean, it's definitely getting to know like what the properties all look like. A lot of the city was built in the same time frame, so kind of what the common problems are going to be, if they're going to be problems with any properties, and then just getting them onboarded, getting them rented out. So we've learned that, if with this size of property, I know that I'm going to be able to collect this much rent. I know that if I allow pets, that it's not going to take long to get our tenant in there, because there's plenty of people that want to have pet-friendly rentals that can sometimes have a hard time finding them, and they're willing to pay a little bit of a premium for that. And just a lot of it was just getting the comfort with my team and how everything was running. It was like everything went well with the first 2, no big hiccups. And so I kind of just developed that confidence of, all right, I know what the steps are. I know what it is to buy another property that's very similar to these ones I already have. And so it was kind of just went into autopilot. And that last purchase was super easy because all of the learning curve was already behind me.
Yeah, once you get that first one and start to develop those systems, you just keep doing the same thing, right? Rinse and repeat. I do want to ask too, the pet policy in terms of getting renters with pets, do you allow that in the multifamily property as well as the single families? I always worry about pets in a multifamily, like if I'm going to have 3 people with dogs all like fighting or something, right?
Yeah, so 2 of the 3 already had dogs when I bought it.
There you go.
And so
the pet policy's figured out for you, yeah.
Yeah, I was like, well, apparently it's going fine. So, yeah, I probably would have anyway, but it just wasn't an issue because it was already there. And since they're already there, like their leases that they already had in place have like another month in place before we switch them over to what my property manager will make some changes, I'm sure, but we'll let them keep their dogs. We aren't going to make them get rid of their pups.
Yeah, no, gosh, who would want to do that? And with the inherited tenants, right? I get this question a lot from investors or would-be investors that I talk to is, what are some of the things that you were doing when you bought that property to make sure that the inherited tenants were people that, it wasn't going to ruin the deal, right? Like rent rolls, making sure they're paying on time. Like what are some of those things that helped you make that decision a little bit easier?
Yeah, so it definitely was just making sure like that the leases that they had in place were good, that, again, checking with the previous owner that there weren't any red flags from them.
Mm-hmm.
Like I mentioned that the tenants made it so we had to cancel and reschedule showings a bunch, which, so that was a little bit concerning, but it was just, once I figured out that it was mostly because the tenant, the one that was the issue, like worked from home, had some like, I guess, sensitive materials that she didn't want just like people coming in at any time. So she had a weird schedule to work around. And also she's been living there for quite a while.
Mm-hmm.
So it wasn't, and she expressed interest in staying. So I was like, all right, well, I don't have to talk to her directly because she's going to deal with my property manager. So she's a little bit strange. Like I'm not the one taking the phone calls.
Yeah.
And she doesn't seem like she's going anywhere, and she always pays on time. So
can't beat that. And that buffer with the property manager in place makes it a little bit easier. I get it.
Yep.
Yeah. I think in addition to systems, you also speak about comfort and just kind of having been through this process and kind of getting over that fear of buying the first property and like what that means. And then the second property and the comfort gets it just gets much easier each purchase, to the point where at this point, 4 buildings in, this has got to feel just night and day different from that first one. I've heard similar things too about people purchasing with a partner, that rather than feeling like I have to do this all on my own, this is super stressful, this is a big chunk of my money, sometimes going in with a partner can also be a comforting piece, because then you're locking arms with someone and charging forward together. So I'm curious what your experience has been working with partners. And so we probably should back up for a minute. Can you introduce briefly who the partners are that you have on these new 2 properties, and how you kind of came about that, and what value you see in that as an investor?
Yeah, so my partners, both of them came to me. I didn't go out looking for partners. And I'm sure people are going to hear a bunch of red flags in my next few statements here, but one of my partners is my brother, and my other partner is a good friend of mine. They basically just saw what I was doing and became interested. And so they were curious about real estate, but didn't have any experience, and were comfortable with partnering with me to go forward with figuring it out. And how we do that is I pretty much do everything. I'm the one with experience. And so they defer to me, they trust me. And so it's really more they provide money. They're basically buying an equity stake in the properties that they're involved in. And so that's kind of the basic structure of how that goes and how that happened.
Yeah, and we don't need to get into all the details, but I am curious, like, is it something where you do 50-50, or they're just buying in, like you said, like a portion of that, and then they're getting a payout? Or because a lot of times when we talk about this, it's division of work, right? Okay, I'm going to fund all the money up front, and you're going to do all the property management. But in this case, like, you have a property manager, and maybe it's just a piece of that. So how does that work, just in brief?
Yeah, so we put in the same amount of money, at least so far. What we've done is we both put in the same amount of money, but because I do all the finding and managing the managers and all of that, I get a bigger equity stake.
Gotcha.
So I get, on one of them, I own 55% of it for putting in 50% of the money.
Makes sense.
And so that's kind of the basic breakdown of how I get compensated for my work.
Talk to me a little bit about the legal and paperwork side of it too. And so I know that there's maybe some differences in inherent trust at baseline, because this is a brother and a really good friend, right? Like, you're going to inherently trust those people more than like if your new neighbor that you just met a week ago wanted to become your business partner. Like, there's going to be a very different, just inherent trust there. How do you put together either like true formal legal documents, or how do you just kind of decide on these things and document these decisions moving forward to kind of prevent issues down the line?
Yeah, so if they are involved in the purchase, they're listed on the title and on the loan. So we, go through the approval process together, and we both, have legal ownership of the property, as far as titling and everything goes. And then as far as just like how the rest of it operates, I wrote up a pretty simple contract that outlined, this is the property, this is how much money we're putting in, this is the equity split, and this is how money will get divided. When payouts happen, here's how it'll happen. Again, because I already had systems and everything in place, I just plugged these into what I had going on. So I manage the bank accounts, I do everything. I'm really in the situation where they're not going to be able to like screw me over in any way. And so like, if anything were to happen, it was because I was being nefarious, and I'm not going to do that.
Well, it's good. They put a lot of trust in you then. That's awesome.
Mm-hmm.
And it's nice to have those things in writing as well. Like, it's nice to have all kinds of clarity around those aspects, even just so that they don't become issues over time, right? Where someone says like, hey, I thought the payout was going to be every 3 months. Why are you paying out every 6 months? Or those kind of details, those kind of nuance of conversation that can get lost over time. But when it's in writing and shared, it sounds like a very wise approach to do that, prevent some of those potential arguments from bubbling up over time.
Yep. And we're really new with this. It could evolve over time. And, I think there's every chance that we might like make it a formal, like legitimately legal document. As for now, it's just like I wrote it up. We both signed it. I scanned it into our shared drive that all the relevant information on the house goes into. So like it's in a shared place where everyone can see it. If you found a lawyer, they could probably poke a bunch of holes in it. But
for what you're trying to do, I think it serves its purpose, right? You're trying to split up this property. You're both moving forward in the same direction. You have a really great mutual trust built in. So for something like this, where it really is pretty simple on the surface, I don't think you need to get overly complicated with the documentation. I think you've shown that it's easy to do a partnership if you have that trust to begin with. Obviously, if this was somebody you met on Bigger Pockets or something and just decided to partner up, like you'd want to really shore up the legal side of it. But in this case, you guys are both working toward the same goals and you know each other really well. So that trust is already built in, which I really like.
Yeah.
Have you found any of like the decision-making aspects difficult? So again, it sounds more like you are just kind of in control of that, like doing all the management itself. But, what happens if you guys someone wants to sell? Do you have anything prepared ahead of time for that? Or it's just sort of, we handle these problems when they come up?
It's kind of been just, we'll handle them as they come up. We haven't had anything that's really been a big issue or a large expense that we, we don't have enough in the fund for this. And, one of the clauses that I put in our really simple thing was like, if we don't have enough money for something, we'll split it to what it takes to pay for it.
Nice.
So I tried to think ahead of like some of the bigger main things and put them into that simple one-page contract sort of thing that we made. And anytime that there has been anything, more so to this point of like with the finding of the property, be like, hey, this is what I'm looking at. Do you like it? Do you not? And just because of like where they're at and their level of experience, it's been like, looks great.
I love it.
Yeah, so it's really just been like deferred to me since
You've got the experience.
The experience.
So one of the things I want to jump into also is this more recent single family purchase. You had done a couple of those in the past. Now some time has passed. So I'm curious too, were you able to acquire at kind of the same price point or what do the numbers look like on that most recent single family? You mentioned the triplex already in the prior two. Let's talk about this newest single family.
Yeah. So this one has turned out to actually probably be my best deal so far.
Nice.
Which probably came with, just the experience from doing the previous deals. But this one, I'm pretty sure it was a flip from the previous owner. Most everything was new, new paint, new roof, new water heater, new flooring, kind of everything looked great in there. And my inspector is like, I inspected this house like a year ago and it didn't look like this.
Cool.
So when they flipped it, they initially listed it for, I believe, $94,000 and it sat. They lowered it a couple of times. I don't know why it sat, but it did. So we went in and looked at it and ended up offering them 81. And they're like, as long as you don't come back at me with a long list of like demands or repairs, sure. Wow. I think they were just ready to, because I think it was a flip. I think they were kind of getting antsy that, that they had it on the market for like 6 or 7 weeks. So I ended up purchasing for 81. There wasn't really a lot to do as far as getting it ready to put a tenant in there, throw up some blinds, had to buy a fridge and a stove, and the dishwasher was old, so we replaced that. But pretty minimal amount of make-ready work. And then had tenants move in the 1st of March, so about 2 weeks ago. And they have pets, so with their pet rent and everything included, making $1,000 a month on that purchase. So gets me a cap rate of 9.87%.
Great.
And again, a lot of what's in that house was just barely done. So I don't expect any big CapEx expenses for probably at least several years.
Yeah.
That's okay. Great. And this is a 3-bed, 1-bath also like the prior houses?
Yeah. Yep. 3-bed, 1-bath, like maybe 50 more square feet, not much more, but very, very similar. A little bit different part of town.
Okay.
It doesn't share another property line.
Yeah.
But very similar otherwise with its layout and what it is.
Yeah, because that was one of the things I was thinking. You had paid kind of upper 80s for these other houses. Now, like time is moving forward and you're getting lower in price. That feels like you found a unicorn or something, but different part of town makes sense there. Mm-hmm. But also this lower price and also rising rents. Are you seeing rents rising in your market as well, or is that a function of the neighborhood change?
The rents are holding about steady. I mean, the reason this one rents for a little bit more is because they have pets. So like the base rent is... No, actually, we did list this one higher. Just remember, because the other ones, their base rents are $850, and then this one we set the base at $900. So I mean, I think I did find the unicorn, because like just where it is in town, it's, probably not necessarily a better neighborhood, but the surrounding houses are probably all just a little bit nicer than my first two. And like it's closer to the university. There's a couple things that can get it a little bit that way, and I think just kind of like the kind of supply and demand of the market as well. We're like, let's list it at 900 and see what traction we get, and if we need to lower it to 850, we will. But we didn't end up needing to do that.
Yeah, that's great. And it just goes to show, again, like with a little bit of persistence and knowing your numbers, I mean, you guys knew right away, like, okay, if we can get this place and if we can offer this, I know I can rent it for that. And it wasn't like you had to start from scratch learning all that stuff for a brand new market. You just took the model you had and moved it closer to the university, right? And just repeat it. I think that's really cool. And again, just a great example of what you can do when you start to really know your market inside and out.
Yeah. And I think maybe it's just my short timeline of experience, but I think shopping for properties between Christmas or Thanksgiving and Christmas, I haven't really had a lot of competition.
Nice.
And so I feel like that has contributed to why I've been able to pick up some of the houses that I have for, under asking, just because things have sat for a little bit. There's not a lot of traction going on, and it's worked out well for me.
Great. Well, then, so I know 10 doors is the goal, right? We're getting close to that. What's the next step? Like, what's the next thing from here? Is it to look for another triplex or a quad, I suppose, to finish it off? Or do you think you'll get there through single families, or just whatever deal falls into your lap next?
I think I'll look for both, and just it's what's happening at the time that I'm looking.
Yeah.
At the moment, I'm not actively looking right now. So part of the capital for these purchases came from using a HELOC on my primary residence in Utah. And because I'm kind of that moderately conservative investor, I don't like being too over leveraged. So I'm going to pay off my HELOC before I start looking for anything else. And that's going to midway through the year is probably when I'll have that paid off and can start looking again. But then it'll just be, what can I find? What deal is out there?
I'm funny about that too with my HELOC. Like, I hate to buy another place until it's zeroed out, just because it feels like then I'm taking borrowed money and borrowing money with it. It just feels icky. So I'm always like, okay, no, I'm going to pay this off first, and then I'll go do the next thing, even if it's probably unnecessary. We're very safety oriented pharmacists, so I jive with that.
Yeah.
Yeah. So on that theme of safety oriented too, if you are going to coach someone through a partnership, or if you're going to jump into a partnership with something else, what are kind of some advice you would have, or some things someone should be thinking about before jumping into that partnership?
I think the main things I would say is like, be picky. Don't form a partnership out of desperation. I think you're just setting yourself up to have something go wrong if you're just really desperate and looking for whatever you can find. Like I mentioned before, like both of my partners like have a very deep trust in me. And so that's why I was more willing to get into a partnership. Both of them have actually like told me like, oh, like my boss, or like with my friend who I invest with, like her brother has expressed interest in getting involved. And both of them have been like, no, I don't know these people. I don't need to go so fast and so hard that I'm going to partnership with someone that I haven't properly vetted. And kind of my response to them was like, well, I'm happy to help him out. I can find him a property for a finder's fee.
There you go.
Or something like that. But it's just be very comfortable with like the bedrock of the partnership before you move on and actually start putting money into something.
And I think there's a good distinction there too, that in terms of partnership, you've been referring to owning a property long-term with someone, right? And that's where I feel like that deep trust has to be there for that. But there's also like, and it may not always go by partnership, but there's that helping someone out by like, oh, I don't know if it's a great fit to own a property together, but let me help you find one. Let me help you with these connections. Let me help you. So there's other ways to be helpful and to work with other people without kind of locking arms and charging forward with them for the next 30 years you own a property together, or something like that, when you hardly know that person. So I think that kind of creativity is also pretty cool to see.
Mm-hmm. Yeah, with a couple of these people, like I probably could have got to 10 doors by now if I was willing to jump in with them, but I just didn't feel comfortable with people that like I hadn't even personally met.
Yeah. I like it. Well, Paul, thank you again for coming on the show. It's so nice to get an update from you here. Now that we spoke with you back on episode 16, brought you back on today, and it's just great to see you growing. And maybe we'll bring you back on again when we have you at 10 doors and see how you got there. So just really appreciate your time again.
Yeah, you bet. Anytime.
Thanks so much.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.